Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. We're going to move right into the gold market here as we activated a buy trigger just a few minutes ago above 1803. We are long at 1802.80 and the target is 1817, 1820. We got some economic news here this morning regarding unemployment claims. And we're going to take a look at digital currencies here as we come back here in just a couple of seconds. Welcome back here. Gold trading last at 1805.60. It's down about 930, but the VCPMI has activated a daily buy trigger on a close above 1803. When the signal is activated, when the trigger point is activated, you can choose three different stops. You can choose a conservative stop, which is a close below this level of 1803, or you can use a maximum dollar stop that suits your comfort level. Or you can, if you're doing multiple positions, buy into the 1792, which is the buy two level. Now, what you're looking at here is basically the day trading signals activated on the left of the chart, the 1803. But just to review the energy of the market that is trading below the average price daily, when the market could not get through this average price daily, and the weekly, it reverted right back up, right back down, I should say, to the buy one level of 1803. What we want to see here is the rally on the daily, while the weekly is on the bearish side. So in terms of the gold market, you want to keep your hedges, you want to keep your dust for the time being until we get a little more clarification that we have reverted to a bullish trend momentum by trading above 1820. In the meantime, we can come down to 1796 and activate the weekly buy trigger of 1796. Let's continue to just trail the market here, watch the market, and see what it wants to do here for the rest of the day. We have a lot of volatility in Hood. The market is down about 11%, and that stock is basically going to be trading extremely volatile over the past over the next few weeks until it's able to settle down. I understand that there is some filings that have been done to issue more stock, as the stock essentially ran out of stock as of yesterday, which is what created this spiked into this 85 level. So it's going to be a very volatile stock. In the meantime, maintain your integrity, you lock in the profits as we recommended this morning, and look for buying opportunities in any correction given. Let's go back here to the gold market. 1804, 1804.10. let's just keep an eye on this market here for a little bit and see what the rest of the markets are doing here as we enter into the first hour of trading. I always allow for at least an hour of watching the market, particularly in days like this in Hood, and whenever we get provides a tremendous, some tremendous opportunities within that first hour of trading, especially if they are able to get the market to the extreme below the mean, as we have in gold activating the buy signal, which is for a day trading buy signal, a day trading trigger. We'll take a look at the weekly signal here, just out of curiosity, and see what the weekly looks like. As you can see on the weekly average price of 1816, 1817, the market has, even though we went through this average price yesterday, we didn't quite get to that 1837.38 and reverted back down below the average, now trading below the average. So the bullish price momentum, if you did not take any profits yesterday up here, reverted to test the average price, the weekly average price of 1816. And basically now you can see the energy of the market reverting back down and has activated the buy one level of 1796. This is on the weekly. The silver is trading below the average price as well. So it's in a bearish price momentum unless it trades above 26.31, and it will negate this bearish pattern and will activate a bullish price momentum pattern, activating the 26.11. We have activated a buy trigger in silver as well from the low of 25.16.5. So it looks like we have a buy on silver as well. We're going to be buying a silver at the market as well. Buy a silver at the market.
Order filled.
We're long at 25.27. So we've activated a buy trigger in gold and a buy trigger in silver. Want to add hood on this time frame. We're trading at about 60. We're down about 10%. We're fluctuating quite a bit. And some of the other digital, Bitcoin is down a little bit. GBTC is down slightly as well. GDLC, digital assets as well. So we got a bearish tone in digital assets and the metals markets here, but we want to see trigger points being activated from these levels here, as you can see. Keep long your gold position. If you have multiple contracts, you can begin to take some profits at $300 per contract. Or you can trail your position with a stop until you get to your target, which for the day is 1820. Or you can use the weekly target of 1817 if you have multiple positions. We're long gold and silver. The target in silver is 2562. And you can use the 26, 16, 17 level, a close under, if you want to use it as a protective stop. Market's picking up some momentum here. Some volume is coming in. Hold on to the balance of your positions. If you begin to build equity on your trades, you can use a trailing stop and follow the market. And depending upon your multiples, obviously, you can choose to use your trailing stop at different levels. Once again, the initial level that we recommend as a conservative stop is a stop below the 1803 level, which is the pivot level below. In other words, upon the trigger being activated, short or long, use the pivot level above or below the signal on a closing basis as a protective stop, conservatively. If you're an aggressive trader, use the level below, in this case, the buy two level of 1792 or 1796, which is the weekly buy one level, to add to your position upon confirmation, or if you want to manage your multiples at that point. So the variable changing price momentum indicator is a very, very flexible indicator that allows you, based upon your profile, to position yourself intelligently in the market. It gives you a GPS to guide your trade, to guide the directional momentum of the market. You don't need to figure out if it's going up, it's going down. We have a probability, a mathematical probability that essentially is as good as gold. No pun intended. But it does the work for you. The robot does the work for you. So you don't need to spend a lot of energy trying to figure out where the market is going. The robot has already figured it out. And the market is going to do what it's going to do anyway, regardless. But you have a higher degree of probability going on your side when you make an intelligent decision like this, a technical decision. What I want to share on this segment is basically the latest report that we published in the Associated Press through Seeking Alpha, which is entitled, called "The 2020 Annual Target of 2164 has been activated." Hello, everybody. This is the Equity Management Academy special report for August the 3rd, 2021. Gold. The 2021 annual target of 2164 has been activated. Summary. The bond market appears to have discounted all of the talk about stimulus and the threat of inflation exploding. The markets are saying that the consequences of printing the amounts of money that the government is printing is unsustainable. Congress is looking at approving another $1 trillion bill for infrastructure, and more is on the way. The 10-year has gone from 177 to 116. If it closes below the 1% yield, it will provide the fuel for a rally in gold and silver and commodities in general, which could be explosive. Looking for a portfolio of ideas like this one, members of Mean Reversion Trading get exclusive access to our portfolio in Seeking Alpha. Fundamentals. From the end of May, we came down aggressively to 1761 on the comments made by Chair Powell at the May Fed meeting about possibly tapering. The market appears to have discounted all of the talk about stimulus and the threat of inflation exploding. The markets are saying that the consequences of printing the amounts of money that the government is printing are unsustainable. Congress is looking at approving another $1 trillion bill for infrastructure, and more is underway. The printing of money looks like it will continue. Based on the 10-year note, interest rates are not going up. The 10-year has gone from 177 to about 116. If it closes below the 1% yield, it will provide the fuel for a rally in gold and silver and commodities in general, which could be explosive. There is a high probability that as we move into the next few months, we could see gold hit 2164 as predicted by our yearly gold report from last October. In October 2020, we published in Seeking Alpha our gold annual targets based on our proprietary variable changing price momentum indicator, the VCPMI. Back in October 2020, the 360-day price trend momentum was at 1771, which was bullish. The VCPMI for the 360-day cycle of 1810 was also bullish. A close below 1810 negates this bullishness to neutral. If long, take profits at 2164 to 2442. With the market closing at about 1888 at the time the report was published, it gave us a pretty good picture in terms of the different filters that the VCPMI uses. The first filter is the 360-day trend momentum. It is the annual trend momentum of 1771. It is the 9-month cyclical moving average. This identifies the relationship with the 9-month cyclical moving average, which was at 1771, and the market price. Since the close was above the average price, we came into this year of 2021 with a bullish trend momentum. Regardless of any fundamentals, this gave us a probability model of the extreme above and below the mean and the extreme levels of speculation. The VCPMI is a mathematical probability model that identifies the extreme levels above and below the average price. Once we identify the average price of it as 1810, then we can extrapolate the extreme levels above and below that price. That shows us when the market reaches an extreme level, when it is most likely to then revert to the mean. It is never 100% certain, but it is highly probable. Since we published the report at the end of September 2020, the direction and trading instructions have been pretty accurate. It has not quite completed the target of 2164, which is the target for the 360-day cycle. The sell 1 level is 2164, and the VCPMI sell 2 level is 2442. Below the mean, the VCPMI buy 1 level is 1532, and the buy 2 level is 1178. If the market trades above the mean, watch for the market hitting the sell levels to go short. If the market trades below the mean, then watch for the market hitting the buy levels to go long. The buy 1 and sell 1 levels have a 90% probability, and the buy 2 and sell 2 levels have a 95% probability of the market reverting from those levels to the mean. The market has reverted from a 61.8% retracement to around 1673. This seems to be the first leg, the first level, or bottom of this current correction that has occurred since May of this year. A 1914 high was made, and we have been in a corrective pattern ever since. We are trading close to 1810, and for those who feel that they might have missed the move, this could be a great opportunity to enter the gold market since that 1919 level. This has been a counter-trend correction. The market is in fair value of around 1810, with the annual target of 2164. We appear to be looking at a five-way pattern developing. The low on March 8 to the high on May 24 of 1915 is the first leg. It is also established an uptrend resistance level and uptrend pattern. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ematotrade.com, or listen to any of our previous episodes. Wanted to share this with you and come back here to the market to give us an idea basically what's doing. And as you can see in the gold, we're trading below the 1810 level. 1810 is the annual average, and so what is important to see is pretty closely what the relationship is with all the other averages. And so we have 1817, the weekly average, 1820, the daily average, 1810 is the yearly average. And so, but right below the average, because we're trading now below those averages and the price momentum is bearish, you have the levels below that give you the levels of support or the extremes below. And so far, this cycle seems to be activating a daily buy trigger at 1803. And the target for the daily is 1820. The weekly in between is 1817. So I'm going to continue to recommend for you guys, if you follow this trade recommendation, to stay long. Use the protective levels that we pretty much recommended, and let the market decide pretty much where it wants to go. Thank you again for the opportunity to share this great information with you, and I look forward till next time, my friends. A great trading day. Talk to you soon.